Hello again, everyone. In this technical analysis of the stock market video, I call it What's Next because we want to focus on what's happening here with the S&P 500 and the overall market. And we're going to look at the VIX and one of the sentiment indicators I look at every day, which is the put to call ratio from the CBOE. And then we're going to check in on gold and see what's happening with that. So I didn't have a video last week. I was traveling, so kind of took the weekend off. So what's happened in the last 2 weeks is exactly what I said 2 weeks ago. The trend is continuing. We just continue to ride above that 10-day moving average. The moving averages are all aligned to the upside, but we're running into a little bit of divergence that's showing up in here. Now that's happened before. It happened back here at the end of February. We got a little bit of a pullback, and it's happening again now. So let's take a look. Well, first of all, let's just look at what happened on Friday. We're up 4.58, tight little doji candle in here on the S&P 500. Let's take a look at the weekly view. And for the week, it was actually down 2.38. And it was, again, a tight little doji type candle. Now look at the range in here. When I'm talking about the range, I'm talking about the high and low for the week. 26.10. So 26 points for the entire week. Look back. When was the last time? Now, granted, there was 4 days, so a little bit of a holiday shortened week, but still, look back in here through all the time. Here's one that's about 30 points. Okay. You got to go all the way back to the high, back over here at the top, back in September, the week of September 23rd, we had 27.87. So if you round it, 28 points. This last week, 26 points. We're even more compressed than what happened right at the top back in September. So does that mean that we're about to top out? No. I mean, it gets your attention. We're outside the Keltner channels, with the top end of the Keltner channels on the weekly chart. We're very compressed, which means we could be pausing, but a lot of times you're getting ready to have an expansion. Now, which way is it going to go? Let's take a look at what we're looking at on the Elliott Wave picture here. Okay, here is the Elliott Wave picture that assumes that we are still doing a intermediate wave 4. Okay, so intermediate wave 3 peaked back up here in September 2018, and then we had a 3-wave move to the downside that culminated with a wave A in December, and that we're working a wave B. Now, this would mean that we're either doing a big flat, or a triangle of some kind. We have a 3-wave, looking for a 3-wave here for B, okay? Now, given that we're doing this, I'm looking for this C wave, A, B, C. I'm looking for this C wave to complete, okay? And I don't believe it's complete yet. And the C waves are going to be 5 waves. They're either going to be an impulse, like I've got diagrammed right here, or they're going to be an ending diagonal that has overlap. Right now, I am leaning towards an impulse. Okay, that's why I put this up here higher, because it just doesn't look like we're getting the overlap. It looks like we got 5 possible little waves in here. We may have this minuet level 3 in here, may be complete at the high on, when was that, Wednesday? Okay, it's possible, which would imply that we're getting a little bit of a pullback or sideways move with wave 4. Got a pretty good little pullback here with wave 2. So right now, I'm looking for this to complete. Now, the other alternative in the bullish scenario is that intermediate wave 4 completed in December, and then we're off and running in a new 5-wave structure, 5-wave pattern right now. And that, again, though, this could be minor wave 1, and I'm looking for 5 waves to complete up for minor wave 1, just like what I've got labeled here. And so as you look for this to complete, I'm also doing the same thing. I'm looking for that 5th wave to have the 5-wave structure. So very similar to, doesn't matter which bullish scenario you're looking at, you're still looking for the 5 waves to complete themselves. Let me go back over to this scenario. And we are very, very close to new all-time highs in here, right? I mean, look at the all-time closing high. I think it's like 29.30 or something. 29.30.75 is the closing high that occurred back here on September 20th. Intraday high 2940.91. All right, so that's the S&P. Let's take a look at the VIX. Okay, this just struggles to get any kind of turn in here, upward movement. It was down 0.51 on Friday. It's closing at 12.09. So look at where the intraday, or Thursday, I'm sorry. Look at where the intraday low was on Wednesday. And it went down here to like 11. Actually, it was 11.03. Well, look where it was bouncing around back here in the fall and from the summer. And it's really, really, down here back in the basement again. And the real question is, for how long? It's really, really hard to tell. The trend, the path of least resistance is to the downside. Now we're down in this area. We could bounce around down in here for quite a while. But, we just keep watching to see, do we get a turn? We start to possibly get one on Wednesday, but we didn't get any follow through whatsoever. We've had a couple of fake outs in here, but again, no real follow through other than a couple of days. That's about it. Those were those two pullbacks that we had on the S&P. Let's take a look at the put to call ratio. Let me pull that in. We look at this daily to monitor what's happening with the sentiment in the Chicago Board of Options Exchange. This is the daily readings. This is the 10-day moving average. So when it gets below 0.55 on a daily reading, I color coded dark red. When it gets below 0.50, I color coded even darker, okay? And when it gets below, the 10-day gets below 0.60, I color coded it yellow. It's like a flag waving that the bullish extreme is starting to get carried away. And so now we're at that point where we're getting very, very close to that happening again. It happened a couple of times, but we never really got a turn. So this is what I'm watching. As we continue to push up in this wave, I'm just looking back in here, you can see when was the last time we had big stints of yellow. It was the end of August of last year and in September into the 1st of October when the markets were peaking, okay? So that's the picture on the sentiment. We continue to watch that. And right now, we could be getting another dose in here. But again, the thing is, you just can't bet on that. You got to let price start to turn down, the market roll over to tell you that it's really breaking down. Let's take a look at gold real quick. Okay, GLD, it's been going sideways the last couple of days, and it was up 9 cents on Thursday. Make sure I got the reading. Yeah, it's Thursday, the 18th. And, so right now I've been looking for this to pull back down into around 119 to 120. So we got a little bit more to go. The scenario, my preferred count that I'm working, let me go to the weekly view. Okay, so here's the weekly view that we've got. Let me get this so this shows this a little bit more. And let me get rid of some of these things just to make this a little clearer. Okay, I think we have this big wave down. Came from 2011 all the way down to bottom to December 2016. And now we're looking for a B wave, okay? And so I think that what we've got is a big zigzag ABC that we're working. And here's the ABC. And that this B wave is a triangle, okay? And so let me give a little more detail. Here's the triangle that I'm talking about. And that once we complete this little E wave pullback in here, that this B wave will be complete and be ready to launch off and complete, and go in wave C. That's what I'm looking for. So we continue to watch down in here. Let me zoom in a little bit, picture, and let me go to the daily view. So here's what we're looking for. Now, why do I have this at 119 or so? Mainly because this is where C equals A, okay, in terms of the move down. It could stretch longer than that, okay? The other thing you look at is, where does E versus C? So we could pull all the way down into here, 115, okay? That's what I'm looking for, okay? So right now, this is where C equals A. But we could also pull back down in here, and this is where E would be 61.8% of C, E versus C. So let me zoom back out. Okay, that's it for this weekend. If you felt like the video was helpful, hit the like button. And if you'd like to get more of this kind of information on a daily basis, head on over to joehenches.net. So let me pull this in. Yeah, if you just head on over here to joehenches.net, or beyondthechart.com, will get you there too. And you can click here and check out the membership, and that'll tell you everything you need to know. All right, everyone, have a great weekend, great holiday weekend, and happy Easter to everyone who's celebrating Easter this weekend. I know there are other things going on also. And we will talk to you next week.